Hello everyone, my name is Chris Titley and welcome to the Fintech Australia podcast. The Fintech Australia podcast takes listeners on a deep dive across the fintech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here. As part of the Fintech Australia podcast series, I'm joined by Brett Turley from bit.leave. Is that the correct, or is it bit.leave, Brett, or bit.leave?
You can call it whatever you like, but it's bit.leave, yeah.
Bit.leave, we're talking about fintech and employee wellness. But Brett, before we get into that topic, I'd like to know a little bit about your background and how you came across and how you started bit.leave.
Sure thing. It's a bit of a non-traditional fintech founder background. I started my career in the military, finished up after 9 years in special operations. I was an explosive detection dog handler.
Wow.
So I was lucky enough to do a couple of rotations to Afghanistan looking for buried mines and explosives, and found a few of those in good and bad ways. But that really sort of started my journey understanding burnout. So I burnt out of special operations. It was a very busy time around 2012 for that particular unit of the military. And then I've slowly collected bits and pieces to end up where I am today, starting a small business, heading to recruitment, then HR product management. Through COVID, built a corporate wellness startup, realized the retention and use metrics were horrible inside those sorts of products, and then zoomed back out through the Antler program for the Startup Accelerator and founded bit.leave with my co-founder Kushal last year.
And Brett, talking about bit.leave in its own right, the product and what it does, or the platform and what it does, can you give the listeners a bit of an example of how it works and how it integrates into the workforce, which is part of this topic of employee wellness?
Yeah, so there's a couple of interesting stats we've been pulling out from our journey so far. So if we talk about cost of living pressures, COVID, remote work, all of those things are correlated, or there's been a cause and effect by a lot of these things. And 84% of staff want more time off or more money to help reduce those cost of living pressures. They're either burnt out or they're struggling to pay their day-to-day bills. So what bit.leave does is uses our algorithm, or what we're doing around the leave analysis type thing, to identify churn and burnout risk, and then also map things around company personas or user personas, where we look at the seniority, salary, tenure of individuals, and that gives people the ability to then reward their staff with more time off or more money, which helps pay them more, get them obviously paying those bills, or then giving them that time off to reduce that churn or burnout aspect of the business.
Brett, we've seen during COVID in the last couple of years, obviously a massive change in the workforce per se in regards to physical location and the way people work and the habits and the integrations, etc. But really, in the last couple of years, we've had this focus now on, and more than ever probably, on the personal balance sheet and the stresses that you mentioned. I mean, the traditional format of leave is you kind of go on leave, you're 4 weeks a year roughly, and you kind of go on leave and you get paid. What does this do differently, and what are the systems out there in regards to potentially changing the norm?
Yeah, it's really been an interesting time. Leave accrued by an extra 32% on balance sheets due to COVID, remote work. And there's also the unquantified element of leave theft and time theft due to remote work as well. Yep. So people can steal a half day here or there to go do appointments, or they're doing excessive overtime because they're stuck at their computer and those lines are blurred. So what we do is we're starting to dig down that path of finding out what is happening with those types of constructs, and then giving information and then the ability to optimize, either reducing obviously the abuse of unpaid overtime or leave and time theft from the employee side. So what we do is we dig on not just the cash flow and P&L perspective and helping mobilize that through cash outs or getting people to take their leave, but also the analytics around those other sorts of problems we've seen evolve quite rapidly as a result of the changing workforce dynamic.
With large organisations, you would see a huge liability on their balance sheet in regards to accrued annual leave. The problem that you're solving here is trying to get that off their balance sheet, but also creating a wellness for that particular worker. How does it go about, paying out leave? Is it a common process, or is it quite complicated?
If we talk about the modern awards and enterprise agreement structure in the country, it's rather complex.
Yep.
We've managed to be able to navigate through those and provide something that is compliant regardless of award or enterprise agreement. But what we actually have forgotten in some of our competitors, or where this hasn't been built previously, it always must factor the wellness and welfare component to employees. You can't just cash leave out or get someone to cash their leave out to reduce the liability, because if they burn out, something happens, you then become liable as an employer. So what we've done is found the balance between both of those elements, i.e. the liabilities on the balance sheet, and then also the employee welfare and wellness. And it's about creating that harmony between both parties to achieve a mutually beneficial outcome.
And that product or platform itself is a B2B play as opposed to a B2C play, or can do you think in the future that might be, no matter who you are and which organisation, you might be able to use your system?
It's fundamentally a B2B play, purely because we can't just give the employee the power to want to cash out their excess leave.
Yep.
Like I said, it comes back to that fundamental welfare wellness component and the duty of care. There's a couple of things coming along legislatively where, if we've onboarded digital cards, wellbeing platforms, and other sort of perks and benefits, particularly on the fintech side where it's all monetarily geared, there's a few things around the ISO accreditation 4503 that's been approved and will start to flow on downstream in the coming years, where those services where you can put employees at more risk by letting them just have access to these types of funds will have to switch their model to actually factor what we're already doing.
And you talked a bit about wellness of employees, and this is the topic. And there's two sides to that. There's the obviously the worker and making sure that they're okay, and then there's obviously the employer's processes and practices to make sure that the employee is doing the best within the best that they can possibly do within all sorts of other factors that you mentioned previously. I'm interested to know what sort of trends are out there from an employer point of view to retain staff and to retain staff in a healthy way.
Well, the retention is going to be vastly different due to the industry. Some of those factors that may be impacting, like the construction industry is different to the technology industry, professional services industry. So it really comes down to your own industry requirements, competing for talent, and then also your own company requirements. But what we do is try and give better data around what operational things may be impacting people being able to take their leave and being well rested. And then also that leave optimization component, when you can offer those ancillary leave types, whether it be well-being leave or those other bonus leave types, but consolidating them so people can access them. So then it can go on the EVP of a company. It's a holistic solution. It can't be treated in silos, which we see like well-being platforms, which have less than a 10% adoption rate across organizations. It's all for once you're onboarded. It gets chucked on a job description, you get access to it, you never use it, and then it becomes one of those things that actually doesn't move the needle. So if you treat things as a holistic organism or a living, breathing thing that there's a downstream effect every time you change or move something, you're actually going to be able to add something to your EVP that then carries forward to the actual operations of the business, and you'll see the impact on reduction of recruitment costs, time off work, and those sorts of things. And it won't just be lip service on the front of a job description.
And how important do you think organisations are taking this and the benefits to kind of retain staff? Is it a bit of an arms race about different types of benefits and different types of I suppose recruiting leads and perks, etc. I've seen some companies do rewards and do this and the 4-day work week, etc. So there's lots of different things out there. Are you seeing any sort of trends? And from a broader based question, back to the how important it is from an employer point of view.
Yeah, there's a couple of trends we're seeing emerge. The flexible or 4-day work week trend, where how that construct shapes within organizations individually is different.
Yep.
That is starting to become more and more popular. But then also we see what's happened off the back of COVID. So we had rapid digitization in benefits and perks platforms. And now companies are starting to realize they actually provide minimal ROI because people aren't using them. We also had rapid digitization of cards. So the employee expense cards.
Yep.
Those are where you're going to see a lot more utility between not just expense claims, but benefits as well. So it gives that autonomy, because that's what employees fundamentally want, is that autonomy of choice, whether they want to take time off or they want to use the cash. And then the other interesting thing, which I love around product-centric sort of behaviors, is time to value and timing. So being able to reward an employee on the spot as opposed to waiting to the end of the quarter or letting it slip your mind. So it's probably a dangerous cycle, but our instant gratification is being rewarded a lot quicker these days with B2B level products than we've traditionally seen.
Yeah, it's an interesting point you make about the instant gratification, because traditionally you're talking about, a 3-month bonus or a 6-month bonus or 12-month bonus or along those ways. And then you've seen some fintechs come in to, offer early wage access and a few different things to kind of break that cycle apart. I mean, from a employer's point of view, what sort of tools and prompts can one have to kind of prompt a pat on the back or a success for a particular deal or whatever it might be through their employees to make sure that you can actually instantly gratify your team members?
Yeah, I think I'd actually lean back to my dog training years with this, because it's fundamentally the same, right?
Yep.
You have to reward at the right time, otherwise the behavior isn't marked.
Mm-hmm.
So if you have the tool or the system to do that instant, or even if it's a delayed reward, there's a whole suite of science around variable reinforcement as well. So it's not necessarily the size of the gift, but the timing and the predictability of it, because it's the old Pavlov's dog thing. You ring the bell, food comes out. So there's all sorts of things you can put together with that allow you, whether it is like a small micro gift or a larger bonus, it's all about rewarding the behavior at the right time, because that's where we see employees disconnect. If they go unnoticed, unrecognized, and it happens for months, you get the drop off the high of achieving that goal, and then it's hard to pick that back up by going, oh yeah, here's your bonus, we forgot about it, sorry.
Brett, putting your company's hat on for the next 12 months or so, where would you like to see your company, and can you give us a bit of an update on the progress of how you're going, how the industry's going, and sort of where you fit in?
Yeah, we're kind of resegmenting the market with what we're doing. So we're payroll agnostic, we're HRIS agnostic. We will be building an open API to be embedded into HR and payroll products, because we just want to focus on leave. So if we talk about 12 months down the track, we're launching in Xero in March. So we'll see, hopefully we'll obviously see that adoption through Xero, KeyPay, ADP, those sorts of payroll systems we're looking to integrate with. 300 to 500 advisors using the product, whether it's finance teams or HR consultants. And then what that's going to do is then enable teams to actually have this problem managed, automated, and optimized from the outset. And then onwards to enterprise level customers, where we can embed and become part of their day-to-day stack.
A big market for you. Are you thinking global? Are you thinking Australia only, or just sort of industry by industry?
Right now, it's definitely nailing down Australia, but the way we built Bitly, which may be a little bit of luck, but probably just a lot of obsessing over the problem, is that we can scale. So right now, as it stands, the product is fit for service in countries like New Zealand. We just have to build the payroll integration. So we do have a lot of scale inside the product. We can go to the subcontinent into India. We can go to Singapore based on their leave laws, regulations. So long term, yeah, totally, we're looking global.
Brett, one final question. We've now headed into 2023. I'm interested to know on your views on fintech in Australia, the fintech community here in Australia, and certainly what you're looking forward to, and and perhaps some challenges, but also some opportunities.
Yeah, I think, well, coming from someone that's raising at the moment and pushing into the market, I'm fortunate enough that we're sort of, like I said, resegmenting, so we've got room to play. But I think what we'll see is consolidation of a lot of products. The boom of fintech is kind of going to go through the hard part now of a lot of products being in the market, sales cycles slowing down and those sorts of things. So I think what we'll see is some really good products, which Australia's got some fantastic products in the market at the moment. I think they'll take off even further. People that are already embedded product market fit, I think they'll really consolidate. I think, unfortunately, we'll see a lot of startups shut their doors because of the funding environment and then obviously the economy and things like that. But what we'll see at the back of it is some really strong products that can scale globally, that'll meet a lot of customer need and do some fantastic things.
Brett, thanks so much for the chat today about the employee wellness and fintech and the solutions that you're providing, as well as the market dynamics. I wish you well for the goals over the next 12 months as you've set out, as well as the opportunity at large, and looking forward to catching up at a Fintech Australia event.
Thanks, Chris. All the best for 2023, and we'll chat soon.
Thanks for listening to the Fintech Australia podcast. I'm your host, Chris Titley. The Fintech Australia podcast is a collaboration between Fintech Australia and Sub 11. For more information about membership options, news and the events coming up, jump on to the Fintech Australia website. Have a great day. Thanks for listening, and we'll catch you next time.